Hi everyone, Matt Connor here with Connor Management Group, and this week we're going to look at the best overvalued stock to sell right now. Today is Thursday, May 15th, 2014, and here on the opening slide we see that this company is in the farm and construction machinery industry, and we see its 12-month downside potential as 31%. So this is a stock that you could consider selling short. This is a stock that you could purchase put options on. Those are just two ways to potentially profit from a stock that you think is going to go down. So on to the next slide. Excuse me. We see that the name of this company is Joy Global Incorporated. The ticker symbol is JOY, and the industry they're in is farm and construction machinery, but more specifically, they operate within the coal industry. And once again, we see the 12-month downside potential at minus 31%. On to the quick facts slide. Joy Global Incorporated manufactures and services mining equipment for the extraction of coal, copper, iron ore, oil sands, gold, and other minerals. It operates in two segments: underground mining machinery and surface mining equipment. In 2012, 56% of the sales came from the United States, 19% of the sales came from Australia, 14% from Europe, and 10% was other. So this is a pretty straightforward business. They sell and manufacture equipment for extraction of ore and doing other types of mining. The ticker symbol is www.joyglobal, that's JOYGLOBAL.com. They're headquartered in Milwaukee, Wisconsin. They were founded in 1884, and they have 16,600 employees. Once again, the ticker symbol is JOY. The sector they operate out of is industrial goods, and the industry is formerly known as farming and construction machinery. The annual revenues over the last 12 months for Joy Global was $4.7 billion. Their net income over the last 12 months was $441 million, and their cash from operations was $611 million, and their market capitalization is $5.8 billion. So they are a sizable company. Going on to the products and services slide, we have a picture of their logo, Joy Global, and we have 6 photos of the different types of mining equipment they have. I'll describe them. I've seen pictures of this type of equipment very often throughout my life, but I haven't known the formal names for them. So we have something called an electric rope shovel, hybrid shovels, blast hole drills, wheel loaders and dozers, mobile mining crushers, and conveyor products for, like, say, conveyor belts for coal and other things. So there are photos here of these very, very large trucks that does various types of excavation and digging. On to the next slide. We're at the metric slide, and once again, the annual revenue for Joy Global over the last 12 months was $4.7 billion. The net income was $441 million, and cash from operations was $611 million. The operating margins in 2012 were 22.8%, and in 2013 the operating margin was 24.2%. Onto the valuation metrics. The trailing PE ratio right now for Joy Global stands at 11.9, and the forward PE ratio stands at 16.1. So the forward PE ratio is higher than the trailing PE ratio, and that implies and means that the earnings are expected to contract and get smaller over the next 12 months. PEG ratio is -2. That's something that's consistent with negative growth in the company. The price to sales ratio is at 1.2. Not overly rich. The price to book is at 2.2, and the enterprise value to EBITDA is at 7.4. So all these valuation metrics, they're consistent with a company that you would think is not richly valued, possibly cheap. But the fact that the forward PE is greater than trailing PE should raise an eyebrow, that's for sure. The recent closing price for Global, as of yesterday, was $59.41. The 52-week low for the stock was $47.83, and the 52-week high for the stock is $62.49. So the stock is closer to its high than its low right now, but we believe the stock can still pull back quite a bit. The 20-day moving average for Joy Global is $60.05. The 50-day moving average is at $58.69, and the 200-day moving average is at $55.21. So that relationship tells you that Joy has appreciated a bit. It's gone up a bit as of late, just based on those moving average relationships. The average daily trading volume for Joy Global stands at 1.5 million shares per day. The beta for the stock is 2.1, so the stock is a bit more volatile than the market in general, either up or down. And the company does pay a dividend. The dividend yield right now is at 1.2%, and the average dividend payout ratio, the average of the last 3 years, is at 11.3%. Now, Joy, the majority of Joy's business is in the coal industry. So basically, how the coal industry goes is effectively how Joy Global is expected to go. And so you kind of have to understand that the coal industry backdrop story to understand why there's just kind of a negative view right now with Joy Global's business. Right now, as we mentioned, the majority of Joy's business does come from the United States, and there's a lot, there's a lot of coal inventory. So the inventory of coal is at higher than normal levels. So that implies that there won't be a great demand for machinery for extracting it right now. Additionally, overseas demand for coal has slowed a bit in China, so that also is going to lower some of the demand for Joy Global's equipment as well. And furthermore, most people have heard about the boom in gas extraction and fracking going on, and all that gas that's being pulled out of the ground, especially in the United States, it is offsetting coal as an alternative source of energy. So more and more gas is being used by the power plants, and less coal is being burned. Consequently, that lowers the demand for Joy Global's excavation products. So we've got those three points going on. Higher than normal levels of inventory. China is their demand is softening for coal, and the domestic demand is softening. And also there have been some regulatory hurdles, and there have been additional rulings that have banned the construction of new coal-fired power plants. That again also lowering the demand for Joy Global. So right now, as we'll get into, Joy Global's financial statements are strong, but the outlook for the industry, coal, for which the majority of its equipment is used for, It's just not favorable right now. So going on to the price chart for Joy, over the last 12 months, Joy has appreciated 5.9%, and the market in general has done a lot better than that, and with the continued growth in gas production, that's just a reflection of the move towards gas as a fossil fuel versus dirty coal. Now, the price of Joy has increased a bit over the last, say, 2 to 3 months, as reflected in its moving averages, but we expect the price to come back quite a bit. So, over the last 12 months, the price has oscillated back and forth from the low in the high 40s to the low 60s, where it is right now. So Joy right now is just below $60, and we expect it to pull back some more over the next 12 months. On to the next slide. As mentioned, the financial statement quality of Joy is very good. I mean, their revenues, for 2013, the revenues were a little over $5 billion, and for 2014 is expected to pull back to about $4.2 billion for 2014. And so they have a sizable amount of revenue, but the debt they have is only about $500 million. That's what they have due over the next 5 years. So, if you have revenues of $5 billion and if the net profit margin is, say, ballpark around 10%, they can handle and manage their debt pretty easily. So that's not a problem. So the financial statements are solid. The operating margins, they're somewhat flat, and they're expected to pull back a bit over the next 2 years. The price pattern trend, as we mentioned, it's essentially flat. The company's stock has gone up only, almost 6% the last 12 months, and Joy is going to face additional headwinds. I mean, the market is showing some bearish signs right now, and Joy's business outlook is not favorable as well. So the recent closing price for Joy was $59.41, and our expected 12-month price target for the company is $40.98. So we see this company having a potential to pull back as much as 31%. So Joy Global we see as the best overvalued stock to sell right now. And on to our last slide. And our last slide is a little different from what we've done in the past, and it's basically to announce the opening of our investment management business. We are now accepting clients, so if you're looking to increase your savings, improve your lifestyle, accelerate your retirement, or just have a bit more of a financial cushion, then we really think our investment management service is something you'd like to consider. As you've heard us mention before, all of our stock picks and finds are found using our proprietary algorithms, where we review well over 3,500 stocks every week. We rank and analyze them and identify price targets and times for those stock picks. So we use those proprietary algorithms to serve our clients in our investment management service. And one thing that's different is that we create concentrated investment portfolios. So we will watch closely just about 20 names of what you would invest in. And, the average mutual fund invests in about 150 names. That's why we believe it's so difficult for many fund managers to beat the market if they're essentially purchasing in the market. Another thing that we do that's especially appealing to clients is that we use what's called a separately managed accounts arrangement. And with a separately managed accounts arrangement, you open the account in your name and you just simply give us discretionary authority of your funds, and we cannot withdraw your funds at all without your permission or without you sending funds or fees to us. Additionally, you can see what you're invested in 24 hours a day, 7 days a week at any time. That's something, a luxury you don't have with mutual funds. And additionally, we can make adjustments to your portfolio at your request. So overall, we offer 4 different strategies, and we use our proprietary algorithms to define opportunities for all those strategies. Basically, a strategy that's a dividend stock strategy, a value portfolio strategy where we invest in deeply undervalued companies, and we're simply just taking long positions, and it's a low turnover strategy. And then for those that have a higher risk appetite, we have a long short portfolio strategy where we take long or short positions just based on market conditions. And our high risk, high return is a strategy is called our option portfolio strategy, where we buy call options or put options based on what we find is timely opportunities. Typically, we will take in the money, deep in the money, call or put option positions that have expiration time from 5 to 9 months. So those are our 4 strategies. And another thing is that those strategies appeal to different risk appetites. You could be in one of those strategies or be in more than one of those. So, we take advantage of the latest technologies available to do this. Separately managed accounts are becoming more and more popular because with the advances of technology, you don't have to be a millionaire now to receive the service. And so we're combining those features with our proprietary algorithms to bring you what we believe is a very high quality investment management service. So if this sounds of interest to you and you have $25,000 or more to invest, please give us a call about opening an account with us. And we can be reached at 281-947-2201. That's 281-947-2201. And you can find more information on our website at www.connermg.com. That's CONNERMG.com. So that's all we have for you this week. We hope you found this presentation helpful, and we'll talk to you soon. Take care.